Welcome back to the deep dive. Today, our mission is pretty big. We're not just looking at another blockchain project.
No, definitely not.
We're decoding what looks like a blueprint for, well, a totally different way of running global finance. We're digging into this updated analysis, SORA blockchain, a new world economic order dated October 17th, 2025. It really does propose like an end-to-end replacement for how the world deals with money and governance.
That's absolutely what's on the table here.
Yeah.
I mean, you look at the current system, right? The central banks, all the intermediaries, it was all built for, the 20th century, nation states.
Right, not really designed for today's borderless digital world.
Exactly. And SORA is positioning itself as maybe the pioneer model for that world. They're aiming for transparency, cooperation, and this idea of algorithmic fairness, taking human bias out of the money supply levers.
Okay, so for you listening, you probably had DeFi basics, you know about Bitcoin's scarcity, Ethereum's smart contracts.
Yeah, the usual suspects.
We need to stress, SORA is aiming higher. It wants to be a self-governing, adaptive digital economy, a whole system.
That's a key word, economy.
So today, we're zooming in on the specific mechanics that make it, well, fundamentally different from your standard layer ones.
Precisely. Think of it like we're deep diving into something engineered to be a digital central bank, a democratic legislature, and a global marketplace, all rolled into one. The scope is just huge.
Wow.
So you need to get your head around three core things today. First, SORA's adaptive tokenomics, how it tries to find monetary balance. Second, this digital parliament idea for economic rules. And third, how it's strategically connecting to the old world, like through Polkadot and even CBDC projects.
Okay, let's start unpacking that. And where else to start but with money itself? Section 1 in the analysis talks about SORA's core innovation. Its approach to money supply, this algorithmic monetary policy.
Right, and the heart of that is the token bonding curve, the TBC. This is the core mechanism defining SORA's elastic supply.
Elastic supply, okay.
Yeah, so unlike Bitcoin's fixed scarcity or, stablecoins pegged to dollars, the TBC is meant to act like a programmable, decentralized central bank just for the XOR token.
Okay, but hold on. Let's get critical here like the analysis does. If this thing automatically mints new XOR when demand goes up, how is that really different from a government just printing money?
It's a fair question.
How do they stop, say, some short-term hype causing massive inflation and destabilizing the whole thing instead of stabilizing it?
That's the crucial difference they're aiming for. See, traditional central banks use tools like interest rates, QE. It's all subjective, human decisions reacting to economic data, often with a lag. The TBC is programmatic. It's transparent code. Its job is to instantly meet rising demand by minting XOR, but, and this is key, it simultaneously collects the collateral used to buy that XOR into a reserve. Then when demand falls, it uses that reserve to buy back and burn XOR. It's designed as an immediate, auditable feedback loop. It's seeking equilibrium inside its own economy. The goal is dampening the wild price swings you see with fixed supply crypto, making it mathematically stable, not based on someone's judgment call.
So the TBC is like a transparent, automated version of open market operations. Interesting. But what about the tokens? For our uses three, XRR, VLL, and PSWAP. The goal seems to be distributing risk, right?
Yeah, that's the idea.
But doesn't having three different tokens for governance, security, and liquidity just make things way more complex for the average user? Think about gas fees, managing different assets.
It absolutely adds a layer of complexity up front, no doubt, especially for onboarding. But that seems to be the trade-off they made for systemic robustness. Think of the multi-token approach like a firewall.
A firewall? How so?
Well, if you put everything, governance, security staking, liquidity rewards, all into XOR, then a big speculative attack or a sudden market shock could potentially threaten everything at once. Governance, security, the lot.
I see.
By splitting them up, XOR for governing and spending, VAL for rewarding validators who secure the network, and PSWAP for incentivizing liquidity providers on their exchange, Polkaswap, they separate the incentives.
Okay, so VAL holders just want the network humming. PSWAP holders want deep trading pools. And XOR holders are focused on the big picture, the long-term economic rules.
Exactly. That specialization is meant to make the whole system less fragile, less vulnerable to a single point of failure caused by, say, short-term market games. It clarifies who's responsible for what.
Right, defines the stakeholder roles clearly. Okay, so we've got the money sorted, theoretically. Now you need rules for the money. Let's talk governance. The source calls it economic democracy, even a digital parliament. That sounds like way more than just voting on software upgrades.
It is. That's what's really fascinating here. Every single XOR holder is basically part of the policymaking body. This isn't just, should we tweak this parameter?
So what are they voting on?
They propose, they debate, and they vote on core economic parameters, like funding initiatives for new projects, even the direction of the money supply itself. And it's all on-chain, auditable. The system is designed to evolve from just being code into a living, decentralized economy where the users actually set the monetary and fiscal policy.
That's ambitious. And this connects to that phrase they use, Crypto-Keynesianism. What does that mean in this context?
It's a pretty catchy phrase, isn't it?
Yeah.
It seems like SORA is trying to find this unique third way. It combines the TBC's algorithmic elasticity supply adapting automatically to demand with a built-in deflationary element, the fee burn. Apparently, half of all transaction fees paid in XOR get destroyed immediately.
Burned. Okay, so that creates scarcity.
Exactly. It maintains scarcity and should, in theory, support long-term value, even while the TBC is issuing new tokens to meet demand. So you get flexibility and a check on inflation.
So flexibility and control scarcity. But then how does this parliament decide where the resources, the newly minted XOR from the TBC, actually go? Is it just a fee-for-all?
No, that's where governed minting comes in. Instead of new money just going to, say, miners or validators by default, it's directed towards proposals that pass a vote.
Proposals for what?
Things that are supposed to expand real economic activity. Funding gaps built on SORA, infrastructure upgrades, maybe liquidity programs for specific assets. Things that demonstrably grow the ecosystem, not just fuel speculation. The source material actually quotes the goal as wanting to democratize capital allocation itself. Basically, replacing closed-door bank loans or VC funding with an open, programmable system where the community votes on which projects get the capital.
Wow, okay. That's a fundamental shift in power. The community is literally acting as both the legislature and the central bank.
Pretty much, yeah.
And they even mention forward guidance, like how central banks try to signal future policy.
Exactly, because the whole governance process, proposals, debates, voting parameters, is public and on-chain. Participants can see potential changes coming, changes in supply rules, funding priorities.
So it provides predictability.
That's the intention. Promote confidence, stability for businesses or developers building on SORA. Make it less opaque than, trying to guess what the Fed will do next month.
That internal governance is huge. But having your own perfect little economy doesn't matter much if you can't connect to the rest of the world, right?
True. Isolation is death for these things.
So how does SORA plan to actually integrate, become a real player globally?
Well, their first big move was connectivity. Getting that Polkadot Parachain slot was absolutely strategic. They secured auction #59 back in 2025.
And why Polkadot specifically?
Because it immediately solves that isolation problem. Being a parachain gives them built-in interoperability with all the other chains connected to Polkadot. It also means their security is handled by Polkadot's main relay chain, which is a huge plus for scalability and trust.
Yeah.
And crucially, it opens up direct liquidity pathways to the wider crypto world.
Okay, Polkadot handles the crypto side of integration, but you mentioned connecting to the old world too. This is where that dual stack model comes in, right? With Hyperledger Iroha too.
Yes, and this, I think, is where it gets really clever strategically. Iroha 2 isn't just another public blockchain. It was developed by Soramitsu, the same entity behind SORA initially.
Okay.
And Iroha 2 is an enterprise-grade permissioned blockchain framework. It's designed specifically for institutions, banks, governments, big companies that need compliance, control, privacy features, things you just don't get on a purely public chain.
Right. The regulated world has different needs.
Totally. So this dual stack, the public, permissionless SORA network running alongside the potential for private, compliant Iroha implementations, that's the bridge. It's designed to connect the freewheeling world of DeFi with the highly regulated traditional finance world.
That sounds exactly like the kind of tech needed for things like central bank digital currencies, CBDCs. Are they actually doing anything there? Is there a real-world example?
There is, and it's a big one. SORA's tech stack, specifically leveraging Iroha's capabilities, is actually underpinning Bokolo Cash.
Bokolo Cash.
It's a CBDC pilot project in the Solomon Islands, launched with the Central Bank of Solomon Islands.
Wow. Okay, that's not just theoretical then.
Not at all. It's concrete proof that these decentralized systems can cooperate with regulated finance. It serves as a potential template showing how different national economies could eventually connect through these kind of interoperable, algorithmically governed systems, maybe bypassing some of the old correspondent banking friction.
Fascinating. Okay, and back on the sort of user or DeFi side, they're also doing synthetic assets?
Yeah, which fits perfectly with their broader goals around financial inclusion. By letting people create and trade synthetic assets on SORA tokens that track the price of real-world things like commodities, stocks, maybe other currencies. It allows anyone, anywhere, to get exposure without needing traditional brokerage accounts or facing geographical restrictions. It helps pump more value and liquidity into the SORA ecosystem itself without needing the actual physical gold bars or Apple shares sitting in a vault somewhere.
Right. Democratizing access again. Okay, section 4. Let's talk tools. What actually drives activity within this SORA economy? The analysis points to Polkaswap as the engine room.
Yep, Polkaswap is SORA's own native DEX, decentralized exchange. It's built right on the SORA network.
So it's tightly integrated.
Very tightly. It's where XOR, PSWAP trade, obviously, but also assets bridged in from places like Ethereum or Bitcoin, standard DEX stuff like swaps, liquidity pools, but it also aggregates liquidity from other sources.
And how does it tie back into the whole economic model?
Crucially, every trade on Polkaswap reinforces the monetary system. Remember the fee burn?
Yeah, half of XOR fees get destroyed.
Right. So trading activity on Polkaswap directly contributes to that deflationary pressure, working alongside the TPC's elastic supply mechanism. Every swap helps stabilize the currency, in theory. The DEX isn't just a feature, it's part of the monetary policy toolkit.
Clever. And then the most practical bit for an average person wanting to use this stuff in daily life, the SORA card.
The SORA card is kind of the last mile, right? It closes the loop. It lets you actually spend your XOR held in your own wallet directly at shops or online using existing payment networks.
Like a crypto debit card, basically.
Essentially, yeah. But the key difference is the focus on self-custody. It demonstrates how this decentralized capital, governed by this digital parliament, can actually become usable money day to day without you needing to hand it over to a bank or an exchange first. It keeps the user sovereign.
Okay, this whole vision, it's incredibly ambitious. Redefining money, global governance. It sounds amazing on paper, but we have to talk risks. What does the source material itself identify as the main challenges Okra is still facing?
Yeah, they do acknowledge a couple of big ones. The first is liquidity depth on Polkaswap.
Meaning
if there isn't enough money sloshing around in the trading pools, the TBC might have trouble handling really big, sudden shifts in demand smoothly, like if everyone rushes to buy or sell XOR at once.
Could it break the peg, essentially? Or cause massive slippage?
Potentially, yeah. Or just make the TBC less effective at maintaining that stable equilibrium. They try to fight this with the PSWAP token incentive, specifically designed to encourage people to provide lots of liquidity.
Okay, so liquidity is one. What's the other?
The other big one is governance concentration. It's a classic problem in token-based voting systems.
Whales controlling the votes.
Exactly. The risk that a few large early holders could have too much influence on policy decisions, especially in the beginning. They mentioned trying to mitigate this with high thresholds for proposals to even get voted on.
Make it harder for just anyone to push things through.
Right. And they also talk about plans for things like quadratic voting down the line. That's a mechanism specifically designed to reduce the power of large single votes and give more weight to broader consensus.
So they're aware of it, working on it. Okay. Let's try and wrap this up. What's the big takeaway here for you listening to this? The source calls Iroha a living experiment in global economics.
And I think that's the perfect way to put it. It's not just tweaking DeFi. It's aiming to be this supranational coordination system. Yeah. It's trying to merge 3 distinct layers successfully.
3 layers.
Yeah. Layer 1, the DeFi layer, with Polkaswap and the TBC handling the open permissionless finance. Layer 2, the institutional layer, using Iroha to connect with banks, CBDCs, the regulated world. And layer 3, the governance layer, the Aura Parliament, setting the rules for everything.
Creating a complete financial stack.
Exactly. One that aims to operate above national borders, cutting out a lot of the traditional friction and gatekeepers.
It really is a blueprint for a potentially very different kind of world economic system. Borderless, algorithmic, run by its users. That's what makes diving into the SORA stuff so compelling. It feels designed for what finance might look like in the next decade.
Absolutely. And thinking about that leads us to the final kind of provocative question this whole structure throws up. SORA wants monetary flexibility without a central authority, right? It puts the power to create money and set economic policy directly into the hands of its token holders, this digital parliament.
So the question for you to mull over is, Can that kind of collective intelligence operating through on-chain governance actually make consistently better decisions about the money supply than traditional central banks have? Can a digital democracy reliably outperform expert committees when it comes to managing an economy? That's the real experiment here. And maybe the ultimate test of whether this model can truly work at scale.